All right, everybody, happy Sunday. I really hope you had a good weekend. Summer is almost here, and as every Sunday, we do a preview into what the next trading session is going to be. What are news, what are earnings, what are stuff that are going to happen, and will pretty much give us maybe an insight into where the market is going to going because these market movers may shift the market up or down. So we want to be aware because it may give us, as I mentioned, an insight. It doesn't matter if you're investing, doesn't matter if you're day trading, doesn't matter if you're swing trading, all of those, which I do, gives me an indication of, okay, which stocks should I be, either adding, which stocks should I be continue to holding, which stocks should I sell, all right? Or which event might move the sectors or the industries of the stocks that I'm holding, maybe swing trading, etc., etc. So right off the bat, things are already looking very, very juicy because I'm looking at the future session who opened almost 90 minutes ago, and the Dow Jones is already up 200 points. S&P 500 and the Nasdaq up 1%. So this early in the future session, it's a good indication of an actual a good green day the following day. But remember, this market is still very volatile, meaning there is still a lot of uncertainty out there. So people, which I believe might be overreacting in the last couple of weeks, if they are still not sure about certain things, this market will still not have any clear direction. And what looks to be like a solid green day tomorrow may be a solid red day. And we've seen this for the last 8 weeks, for God's sake. So far, things look good. Now, looking at crypto also is looking good because Bitcoin is back over 30,000 level. Ethereum crossed 2,000 again, and usually, if you look at the last 4 to 6 weeks, crypto is now pairing or trading following the same pattern with stocks, which didn't used to be the case because crypto used to be like the refuge. When stocks were not doing good, people would put money into crypto. But since the big money got into crypto, things change a little bit. Is that a good thing? Maybe that would be a topic for another discussion another day. All right. But these two look good for tomorrow. Now, jumping into the market movers, still earnings, we have about 90% of the S&P 500. So that is 450 companies that have already reported. We still have Zoom, for those who are most familiar with us, Zoom, Best Buy, Trip.com for travel, Nordstrom, retail, Nvidia, Alibaba, and Costco. So retail got decimated last week. Walmart, Target, Ross, man, it was a massacre. So Nordstrom will give us another indication. Maybe because they are kind of high end, things will be different. Costco, a little bit same thing. And then we have Trip, airlines, the travel, and then Zoom. We don't know. Maybe it's going to follow the exact same path with Netflix and everything. Nvidia, maybe it's going to follow the path with AMD, which was good, but earnings still a lot to uncover there. Now, another very interesting thing will be additional updates to the US housing market are expected with new and pending home sales for the month of April. If this is going to be interesting because it's going to give an indication into the state of the real estate market. Remember, real estate and inflation. Real estate is the number one, a parameter in terms of giving the calculating the CPI, and CPI ties into inflation. And right now, inflation it's in everybody's mind in terms of risk because it ties to what the Federal Reserve is going to do, which ties to how the stock market is going to react and the economy as well. And then finally, maybe the most important thing we want to hear this week is about consumer spending data that will become available with personal income and spending growth, as well as the April update for the personal consumption expenditures. If you want to get more details into this, because this all also ties directly to inflation, right? On Friday, so it's way at the end of the week, the Bureau of Economic Analysis will issue its latest monthly report tracking personal spending and income, as well as the latest update to its personal consumption expenditures, the PCE index. This personal spending rose at 1.1% month over month over in March, but it reflects the higher cost of gasoline and food, which are the main two things that are driving inflation higher, along with continued strong demand for dining and travel. Personal spending is expected to slow somewhat in April to a monthly rate of 0.7%. If that is the case, then it's gonna continue to play into the the direction of inflation may have peaked already, which will be a good thing. Which will be a good thing because the latest update on PCI will likely show that the Federal Reserve's preferred price gauge is decelerating to 6.4% from 6.6%. And remember, this is the preferred price gauge that the Federal Reserve is using in order to kind of monitor its monetary policy. Remember, increasing interest rates. A lower rate will confirm that inflation rates may have begun to peak after a similar decline of the CPI in April. So this, according to my personal, to my personal views, will be the most weighted indicator to watch for next week. If this is good, meaning if it comes lower than expected, then the market is going to start smoothing on. Okay, we don't have to be we don't have to be that much worried. We don't have to be freaking out as we used to freak out these last 3 months, because now maybe inflation is heading towards the right direction, because as long as inflation is high, it's going to be tough for the Federal Reserve to monitor things, because anytime you have high interest rates, it's not good not only for businesses employing capital to continue to grow the company, but also it refrains investors from holding stocks, and that's why the stock market has been pushing down lately. So hopefully this confirms the fact that things are not as bad as the market discounted. Because if inflation is not as bad, if inflation started to really peak, looking at the PCE index, it means that what the market was already discounting, what the market was already pricing in, what the market was already thinking, what will be the reality for the remainder of this year in terms of, recession, stagflation, inflation and everything, or what the Federal Reserve is going to do, it means they did too much. Like they went too far in the extreme fear which we are currently in. So it will give confidence into people that you may be putting a little bit more safe bet into the market for your money to work while you sleep. And that is ultimately what we want to see, because that's how the stocks you and I hold continue to go up. So lots of things. Not much things to watch for next week, but these 3 things, especially with this PCE, will definitely be a good indicator on what to expect for the remainder of at least this month of May, from maybe the market finally finding a bottom. Yeah.